Hi everyone, welcome to the PayFit and Hibob 2022 UK payroll legislation changes webinar. I'm Nichola and I work at PayFit as a payroll expert, and I am joined by Toby, who is People and Culture Director from Hibob. Just before we start, we'll give introductions to ourselves and to the companies that we work for. So Toby, do you want to give an introduction to who you are and what you do at Hibob?
Thanks, Nichola. Hi, everybody. It's a real pleasure to be here. So yeah, as Nichola said, my name's Toby. I'm the Director of People and Culture for Hibob in Europe. That brings a fun added challenge of being an HR director for a company that creates HR software. So everybody's got a nice level of information about it, and a highly engaged and challenging team to work with, which I absolutely love. My role is that I oversee everything to do with the HR agenda in our Europe region. So of course that also crosses over into HR operations and interfaces with the payroll space. So I'm looking forward to getting into today's discussion with you, Nichola.
Thank you. So who are we at PayFit? So PayFit is a payroll software that originated in France. We've since then branched out into Germany, Spain, and the UK. Our main aim is to make payroll accessible, simple and easy to use. We want people to be confident in running the payrolls for their business. And in order to do that, the benefit of using a software like PayFit is we have in-house payroll expertise from our payroll specialist team. We offer automation in terms of your HMRC and pension submissions. And we also support with things like integrated payroll and HR software. For example, one of our key integrations is with Hibob. We do this so that those who run payroll can have transparency and control over their payroll, but they also have the added benefit and assurance of knowing that we are a HMRC approved software that is regularly tested to make sure it is compliant with the latest HMRC legislation. Over to you, Toby.
Thanks, Nichola. Yeah, I'd love to tell you all a bit about Bob. I used to work in a previous company where I was looking for an HR platform, and actually that's how I first came across Bob. I loved the different and innovative approach it took. So we are at Hibob. Bob is a modern, forward-thinking people management platform. We think of it as a system of engagement designed to meet the needs of modern, mid-sized multinational businesses. So it allows users to automate and scale HR processes, develop people, and connect teams to help businesses and employees grow faster and stronger, no matter where they're located in the world. So we have a global team that serves over 1,800 customers across more than 100 countries and collectively looks after over 100,000 employees around the world. We feel really fortunate to be helping to drive and support employees in their happiness, in the way that they can deliver exceptional employee experiences. And of course, some of those processes that we help automate are through integrations and fall into the payroll space as well.
Fantastic.
So Nichola, I guess we should get into our discussion today then. And I'd love to start by asking you the question, and I think this is probably a fairly chunky one, but luckily you're the right person to answer it. So tell us, Nichola, what changes can employers expect in April?
Yeah, sure. So we always know to expect something around this time of year. We have the standard changes that happen. So what I'm going to do is I'm going to go through a few slides on, what employers can expect, and also kind of how to make sure that those are being implemented correctly. For example, the first one, income tax. The standard tax code for April 2022 onwards is going to be 1257L. That'll be prefixed with an S for Scottish taxpayers and a C for Welsh taxpayers. That in itself is not a change. And the fact that it is not a change is a slight change because we are used to seeing that tax code increase year on year. But as it stands at the moment, the personal allowance for employees is currently frozen. So what do you need to do in terms of implementing this tax code? If your employees are already on this tax code, there's nothing you need to do. And because nothing is being uplifted, then no employee tax codes need to change unless you receive tax code notifications from the HMRC, which are called P9 notices, or you have employees who are currently on a month one, week one tax code. If you have employees who are on a month one, week one tax code, you will need to move those to a cumulative tax code from the April payroll run. And just to let you know, guys, as well, if you have any questions regarding anything that we chat about in today's webinar, there is a Q&A that Toby and I will happily answer your questions in at the end. The next change is a change to national insurance, and national insurance is probably one of the biggest areas we're seeing change in this tax year. Veteran national insurance relief was introduced last year. It allowed for employers who were taking veterans into their first civilian employment to exercise employer national insurance relief for the first 12 months of the veteran's first employment. In order to recover any veteran national insurance relief you have for this tax year, so for 21 to 22, claims will be made in writing to the HMRC, and the HMRC have now published the address that you need to write to claim those. In order to make claims, you should be keeping some records of eligibility, such as when the employee started for you, if they'd been employed in a civilian employment before that. However, this year there is going to be a slight change. So if you do employ someone who you currently claim veterans NI relief for, you will do this by changing their national insurance category in your payroll software to category V. For those that use PayFit, this will be an option in our drop-down menu. And when the category V is implemented, your employee will have the relief for employer national insurance. But please remember, you can only claim this for 12 months from the date of the veteran's first civilian employment, which means if they were employed 6 months in a previous company before joining your business can benefit from 6 months of the veteran national insurance relief. Now, the next one, the big one that has come in, is the Health and Social Care Levy. So in September 2021, it was announced that a new temporary Health and Social Care Levy would be implemented to try and help the health and social care sector financially recover after the COVID-19 pandemic. What this means is, from the 6th of April 2022 to the end of the tax year in 2023, employee and employer national insurance is going to increase by 1.25%. So your 12% employee national insurance becomes 13.25%, and your employer national insurance becomes 15.05%. Now, because this is going to be included in employee and employer national insurance deductions for this year, those who currently don't pay national insurance, so those above state pension age, or employers who don't pay national insurance because they employ someone under 21 or an apprentice under 25, that 1.25% won't be applied unless the employee earns above the upper earnings limit. From the 6th of April 2023, employees and employers will still continue to pay this levy, but it will be shown as Health and Social Care Levy on the employee payslip. Again, for those that use PayFit, and it may be the case in some other software, so I would ask that you check. Those that use PayFit will see that the Health and Social Care Levy will be separated out from April 2022, just for employee and employer visibility. And the HMRC have also asked that employers inform their employees of the increase with a simple payslip message where they can, that says something along the lines of 1.25% uplift in NIC funds, NHS, health and social care. This is optional, so it's not something that employers are legislated to do, but the HMRC have advised that because this is a new levy and because it will increase the employee and employer national insurance, that the employees are made aware somehow that this implementation is coming with effect from April. So the next change is the national minimum wage, and all rates are increasing from the 1st of April 2022. So please make sure that if you have any employees who are on the national minimum wage, that their rates are going to be uplifted from the 1st of April or the next pay period. One of the questions that some employers ask is, when do you actually start paying the national minimum wage? Because it may not necessarily be the 1st of April, despite the rates changing on that date. And the ACAS guidance is that national minimum wage should change the next pay period after the increase. So if your payroll period runs from the 1st until the 30th of April, you must start paying the new rates on the 1st of April 2022. If you pay national minimum wage, but your pay period runs from the 16th of March until the 15th of April, for example, it's not a full calendar month, or it's not a usual calendar month, then the new rates will start on the 6th of April 2022. Now, income tax rates and thresholds. So for England and Wales, there will be no changes this year to the rates and the percentages. Again, this is something that we are used to seeing. The last increase was in the previous tax year. However, this has been frozen for the next couple of tax years, so we're not expecting these thresholds to increase now or in the next couple of tax years either. This is slightly different in Scotland. Scotland and Wales as well have the ability to revise their own tax thresholds, and Scotland have increased their personal allowances this year, which means that those who are Scottish taxpayers, so those whose tax codes begin with an S, will pay slightly less tax based on the increases to the tax thresholds. Now, the national insurance thresholds have also increased slightly as well, which means that whilst there is the Health and Social Care Levy to factor in, the amount on which you earn before national insurance becomes payable both as an employee and as an employer will now change. Employees currently have to earn £797 per month. From April, it will be £823. Employers currently have to pay national insurance on any earnings above £737 a month, and this will be changing to £758 from April. Next are student loan rates and thresholds. So we have 4 types of student loan plan. So we have Plan 1, Plan 2, postgraduate, and Plan 4. Just a reminder, Plan 4 is for Scottish borrowers only, but we are only seeing changes to 2 of the student loan plans, which is Plan 1, which is increasing to £20,195 per year, and Plan 4, which is for Scottish borrowers, which will be £25,375 per year before student loan deductions become applicable. There's no changes to the percentages, so for Plan 1, Plan 2 and Plan 4, employees will continue to receive a deduction of 9%, and after that, postgraduate deductions will continue at 6%. Next, we have the statutory payments. Statutory sick pay is increasing from £96.35 to £99.35. And statutory family leave, such as maternity, paternity, adoption and bereavement pay, is increasing to £156.66 per week from April. And for changes related to statutory maternity, paternity, etc., these rates come into effect from the 4th of April this year. And the statutory redundancy cap, so the statutory redundancy pay cap is the maximum amount you can pay an employee under the statutory redundancy regulations. This is currently £544, but it is increasing in April to £571.
Nichola, thanks so much for taking us through that. You clearly have a good knowledge of this, which will be very beneficial to a lot of us, myself included. I was taking some notes as you went through. And actually, I think you teed it up nicely at the start. We have come to expect changes in April each year, as you said. And so the fact that there are changes is not in itself something that we should be sort of seeing as anything different. However, there are some quite unique features to this particular April, and I guess that those could bring some challenges to employers. And I think it would be really helpful for our audience if you could just pinpoint certain areas of the changes you've highlighted that you think will be of a particular challenge to employers as we look to next tax year.
Yeah, of course. So April is typically a busy time for all organisations, irrespective of the new tax year. So one of the biggest challenges that employers face and will continue to face at this time every year is factoring in the time to implement these changes, because that can be a challenge in itself. So factoring in the time to understand them and to update payroll softwares. this is where understanding what your payroll software can do for you comes in handy as well. The likes of PayFit, as an example, will manage all of these changes on behalf of our customers, so there's no need to update any thresholds or kind of change anybody's kind of national insurance calculations to include the levy, because that's all taken care of. So one of the things you could do to mitigate this challenge, I think, would be certainly speak with your payroll provider and see what support that they can give. Another challenge, and this is more associated with this year more than previous ones, is there is going to be an increase in employee and employer cost. We're used to seeing changes in April for the tax year, and more often than not we can welcome them because we see the thresholds for student loans and tax and national insurance going up, giving employees that couple of extra kind of pounds and pennies before they need to start paying these deductions. But with the combination of the Health and Social Care Levy and the lack of increase, the likes of tax thresholds and student loan thresholds this year for some of the student loan plans, it may be that employees see net pay kind of reduce rather than increase, like we come to expect in previous tax years, which in itself brings the third challenge. Employers are going to be facing queries from employees more than ever. How is my national insurance being calculated now the levy is in place? Why does it feel like my net pay has decreased slightly? So there are a few challenges facing employers as a result of this tax year in particular, I think. And I hope you don't mind me asking, Toby, as someone who works in HR and deals with customers in supporting their employees, how do you feel that HR teams can help? And do you think there's any impact to employees above and beyond what we would normally see that might maybe drive employee queries?
Yeah. I mean, I think there's a couple of different things that come to mind. First off, if you are part of an HR team and you're on this webinar, then you're going to be already taking steps to help your teams, because, and for any other HR folks on the call, we see the whole spectrum, right? We see some employees who are really on top of this. They're really detail oriented. They'll be aware that these changes are coming. And in some ways, as their employer, we're the kind of vehicle just to process these changes. So it's not like they're changes that are coming from us specifically, but we are the vehicle through which they're paid, and often through which they access details of their pay. And so what I would say we should be doing is making sure we're not just waiting for people to come to us with questions come their paychecks after April, but rather being ready to go to them and say, look, there will be changes that we will feel. Have frequently asked questions ready to go and share. If you're working with a payroll provider, then I'm very sure those payroll providers will be willing to come and help you put those frequently asked questions together, and actually be ready to proactively let people know, hey, these changes are coming, you are going to feel this, you are going to notice it. So that's the first thing. Be ready for the communication. Don't be scrabbling around afterwards. Know that you're going to get a higher volume of queries that come in from those that don't really notice these things until they look at their paychecks. And indeed, you're likely to get some queries that come in ahead of time from people that are a bit more on it. Hey, can you tell me what my net pay is going to be next month? Because I know that there's going to be the Health and Social Care Levy, for example. Like, we'll get people that come with us with those questions. So let's be ready for it. And then another area that came to mind as well is the way, for those organizations that have a separate finance or FP&A function, as you pointed out to us, Nichola, because the employer's national insurance contribution is rising as well, we need to budget for that. And so very often for us in the HR teams that are feeding budget information to finance and around the cost of payroll, like, we need to realize and plan that this is coming and make sure it doesn't take us by surprise. There's amazing little details that can be affected by that. Sometimes you might have security provisions on your direct debits for your bank, and if it flips over because you haven't been ready for that uplift, you could end up not paying people on time. I mean, it sounds tiny, but we've seen that happen before, all the way through to just the FP&A team or finance team saying, hang on a minute, why is payroll? We weren't expecting an increase in payroll this month. It wasn't a month where we were doing pay rises or promotions. What's going on? So think broadly about the other stakeholders who are going to be involved in this beyond just the HR team. communicate proactively also with our payroll providers. You were pointing out, Nichola, the kinds of things at PayFit that you're willing to help with, proactive notes and line breakouts on payslips, for example. But make sure you know what your payslip, what your payroll provider is going to be able to do and help you with. So those are some of the things that come to mind. But I'd bring it back to preempt the fact that employees are going to have questions. And whilst a technical answer is, hey, we're just doing what we're told, we're just passing on the changes, we have a higher level of duty and care for that. So let's help people, let's signpost people to the fact that this is happening.
Yeah, I do. And I think employers, from an employee perspective, probably have a much harder task on their hands in April, because I imagine those, we always expect the employee queries after April payday in terms of changes, but I wonder as well now if we're going to see an influx of those queries beforehand, or are employees going to want to know what they're paying before April payday now, so they can fully
coverage, isn't there? Like it's getting more coverage, and I think preempting that is spot on. So let's be ready now for the fact that employees are going to be coming to ask questions, and indeed, let's actually be proactive and say to people, these changes are coming. Like I feel like we shouldn't be waiting for it. We should be guiding them as a way of helping, for sure. And of course, some organizations are going to be affected more so than others. If you are an organization that employs a certain proportion of recent veterans, and I know there are organizations that use that as a really fruitful recruitment engine to go to people that are leaving the forces, there's going to be a disproportionate effect. If you are an organization that relies on paying national minimum wage or living wages, you're going to be affected. So I think understanding this is less about how HR teams can help, and it's more about how we can be ready.
Yeah.
Understand and assess the demographic of your teams. Do I have lots of recent graduates that are paying student loans or soon to be? Do I have lots of people on minimum wage? Do I have lots of people that have recently come from the armed forces? Know your demographic.
Fantastic, thank you. Okay, so we are now at the part of the webinar where we can answer any questions that you guys have sent to us. Toby, would you like me to work through them and see kind of which are for Toby and which are for Nichola?
Yeah, I'm just looking at them as well. The first, I'm looking at the order that they came in. Why don't I've got one here. There's a couple here definitely for you, Nichola. Will the new NIC 1.25% increase be applicable for those who are self-employed as well?
Yes. So the 1.25% is being applied to national insurance as a whole. So it doesn't just include kind of employer typical national insurance, every payroll one, but it also extends to those who are self-employed. It also extends to the likes of Class 1A and Class 1B national insurance that is generated when we offer our employees kind of benefits in kind and offer our employees P11Ds, and that will be impacted as of kind of the next year of P11Ds. So again, that will increase. So the Class 1A national insurance due on benefits will increase from 13.8% to 15.05%. So national insurance across the board is going to be uplifted by that 1.25.
Another one here, do PayFit have a standardized message that we can send out to our employees through the software?
So the standardized message is the one that we showed in the presentation that the HMRC have sent or have recommended. We're not going to do anything automatically because it is up to the customer if they want to do that. And the reason we didn't want to assume that that was the approach all customers want to take was some customers may already do this on a yearly basis when tax year changes happen. But what you can do is you can import a payslip message for all employees with the standard HMRC kind of recommended message on there, so you can upload it all in one import for all employees. So there's minimal kind of work that's required to do for that.
There's a question about the sharing the presentation afterwards. I assume that this is recorded, isn't it, Nichola? So attendees will be able to access the recording.
Yes, it's recorded.
Yeah. And Chris has asked a question which would come to me around, can we automatically import the updates from payroll into Hibob profiles for our employees so they can see the changes? Chris, I have to confess that I'm a user of Hibob, but even though I'm employed by Hibob rather than an expert of the technology capabilities. So I'm going to make a note of your name and look up who your correct customer success contact is, and we'll get back to you on that one. I suspect it will depend partly on what integration is set up, but I don't want to say something false, so we'll follow up with you independently.
Okay. We'll see if any more questions come through. I suppose while we're waiting, Toby, if you don't mind me asking, out of all the changes that you see that impact employees, what ones do you feel will drive the biggest number of queries? Do you think it will be the levy because it's something that is new, or do you think it's still going to be the likes of minimum wage? Or
yeah, I mean, I guess I'm looking at it from, first of all, I can't help but think about that from my own set of customers, and for them, for our own customers, I think it is going to be the levy, because that is the piece that will affect what people are, as you pointed out, that could result in a sort of net deduction for people, and that's going to bring questions about, especially, let's face it, at the moment where there's such a squeeze and an increasing squeeze on cost of living. So I think that would be a big one, but I would caveat that by saying it really does depend on the kind of organization that the makeup of your employees, because again, if you are an organization that employs a lot of people that are on the minimum wage, then you're going to see those changes. But I guess Nicola, I suppose that's more typical for this time of year, isn't it? There's generally changes each April in those, and you'd be used to in that.
Yeah, we always see changes at the tax year. We just, more often than not, we can I suppose, negate all of those reductions in allowances with the increase in the likes of tax thresholds and stuff. So really this tax year feels almost like it's more of a negative than a positive message, which is a shame. But yeah, it does tend to be one of the busiest months for driving queries and employees wanting to know more about the pay and how it's calculated.
Right. And I think it's about separating what is normal for an April time of year and what is new and different, and that I would suspect is where we'll see the increase in questions coming through from the team.
It will. I think we've got a question for you, Toby. Separate question on follow-up for Hibob and integrations. We're looking to get further integration with our finances software from Hibob. Can we get a follow-up on this? Is that something I could ask you to look at?
Yeah, and I just made a note of that as we go. So I've made a note of both Chris and Anne's questions, and we'll make sure how we have somebody follow up. Fortunately, we've got all of your contact info. So we'll absolutely circle back with you.
Brilliant. We've had another question about the presentation. So the presentation is being recorded, so it's always going to be viewable for our attendees today and those who registered. So you can go back and have a look through the slides and take any information that you need. Okay, so we have a question. Is there a specific impact to 0-hour employees in the new year? There's no changes related directly to 0-hour employees. Just be mindful if you're paying any 0-hour employees who are on the minimum wage that they're being paid the correct rate of pay for the pay period that they are being paid for, in line with the changes that are happening in April. We have a question from Sophie. Will PayFit notify employers if they have missed uplifting anyone's national minimum wage? Yes, so one of the things that PayFit will do in April, if you haven't already done your kind of pay uplift, especially if you have employees at the national minimum wage, it will highlight anyone who still needs that rate of pay increased. So you know that you don't need to, you're not going to miss anything. You can import the uplift as well, but you know that your employees will be paid correctly at the correct rate from April.
It looks like we have a question there from Anne. Does PayFit automate the change from M1W1 to cumulative, or do we need to do a download and amend?
I believe it is handled by an import, Anne. However, I will double check and I will follow up with you after the call just to confirm how it's dealt with in PayFit.
Thanks, Anne. I'm loving the like emoji use here on the platform. It's fun to see the thumbs up. It can feel a little bit impersonal sometimes, can't it, Nichola, when you're sat behind these webinars and not seeing a live audience. So thank you for the thumbs up, Anne.
I think it just spurs you on, doesn't it? Especially when you're kind of midway giving a presentation, you see some emojis coming through.
Yeah, exactly. And it gives people time to ask another question. We've had one from Samantha. Please, can you confirm the new national minimum wage effect dates to use for mid-month pay periods?
Yeah, sure. So if you run a pay period, for example, from the 16th of March until the 15th of April, the new rates of pay come into effect from the 16th of April. So the next full pay period you will pay after the national minimum wage changes.
Thanks, Nichola. Let's see if any other questions come through. Sharon has made a lovely comment and also a little reference to Nichola seeing your son pop up on the screen. You did say to me before we went online that you thought that might happen.
Yes, there is a compulsion that comes over him when I am on a call that he must attend and just make his presence felt, even for a couple of seconds.
Yeah, I know this is sort of not quite the scope of the workshop of the webinar today, but I mean, we all see it, don't we, where colleagues are on whatever video call you might use, and there are family members that appear, there are animals that walk across the keyboard, and whenever a colleague apologizes, I say to them, do not apologize. I mean, this is a glimpse into your world, which is a privilege to see, and work is in your house right now via this video, so you shouldn't be apologizing.
It is, yes. No, I don't mind. He comes in, says his piece, and then leaves.
Maria's asked a question while we're doing our little chat there. Do you have an automated Excel calculator to input gross and provides us with net amounts?
I'm not entirely sure if we do. We have a salary calculator. I think that might do a pro rata salary, but I can certainly check. Is that something that you guys have at Hibob? Any kind of gross to net calculators for salaries?
I'm almost certain we don't have a gross net salary calculator inbuilt in Bob, but it's something we could think about. Always love to get product ideas from customers. So.
We can certainly have a look, Maria, and see if we have any kind of content outside of the PayFit app. I know we do have the likes of salary calculators, so we can certainly see if we've got one that does gross to net, and we can catch up after the call.
Samantha, you're one of our question champions, which we love. So any news on the working from home allowance increasing?
Oh, that is a good one. I haven't seen anything, but then again, I haven't looked for a while either. So I can certainly find out, and we can update, and I can let you know what I find. At the moment, I think it is still staying at the £26 per month tax in an eye free. But yeah, let me have a check and have a look offline for you.
See whether anyone's typing any final questions. It's great to have got the questions come through. Thank you, everybody. Whilst we're waiting for any more, thank you again, Nichola. You're really the expert here that's brought such a nice level of information with regards to these changes and really helping us understand, what's different, what's not, and how we can think about it.
Thank you. And it was nice to have you on too, because it's nice to hear, what the impact is going to be from an employee and employer perspective. It's very easy for me to communicate these changes as it is what it is, because we can't change them. But even though we can't change them, it does have an impact on employees and employers.
It does, and I think we've got, from where I look at it, we've got to be careful about kind of how we present these to the team. What we don't want to do is sort of create unnecessary alarm. And so actually what I really enjoyed from today is understanding the difference between what is standard and what is different.
Yeah.
If presented in the wrong way to the teams, say, these are all the things that are going to be changing in April, without context, that seems a lot. But with the context of, by the way, every April, a lot of these things usually change, and there's no difference in that they are changing as normal. There is one or two new components that you need to be aware of. It just helps us. I think we have a role at the moment with things being so tricky for people after the pandemic, with cost of living crisis. We have a role in giving people a little bit of stability where we can. And so again, like understanding the full context of these changes is really helpful.
Yes, I mean, there was a huge push on organisations to encourage supporting employees with financial wellness, and I think that forms part of this as well. We want to promote financial wellness, but we also need to promote the changes that may not have as much of a positive impact on their pay as they have previously.
Right, exactly. And something that we manage in the HR space is thinking about the cadence and approach that we take in kind of merit cycles where we review salaries, and by making sure we're having a proactive conversation with our teams this April. That's a data point that goes into then how we think about upcoming merit cycles. Of course, we can't make commitments and promises that we can't follow through on, but it is a data point that we can then use to discuss internally about what kind of philosophy we apply to upcoming salary changes if we're doing them. I don't think we've had any more questions come through since Samantha's last one, Nichola.
No, I don't think so. And we've got a couple to take offline as well, haven't we?
Yeah.
Both you and I, so we can do that. But yes, we haven't had any more questions, so I think that brings today's webinar to an end. But Toby, it has been a pleasure to present this with you. I've thoroughly enjoyed myself, and I hope it's been informative for everyone who's attended today as well.
Thank you, Nichola. It has for me, and really the credit to you as our proper expert today. Thank you.
Thank you. Take care, everyone.
Bye.
Bye.